Welcome back to the deep dive. Today we're doing something a bit different. We're skipping the prepared remarks from the Q3 2025 earnings call.
Yep, straight into the Q&A.
Exactly. Because that's where you really see what's on analysts' minds.
Mm.
You know, the strategic pushes, the financial surprises, the big bets, K-pop, AI, all of it.
It really is the most revealing part. You get a sense of what investors are actually focused on, the growth levers they're probing. And that very first question wasn't even about Q3 profits, was it?
No, it was bigger picture, about the sheer size of the opportunity still out there.
Right. And the company's answer was pretty stark. Despite feeling dominant, they're still only capturing something like 7% of total consumer entertainment spending.
Just 7%. And what
Right.
about time spent?
Even less, relatively speaking. In their biggest markets, like the US and UK, it's around 10% of TV time.
Wow. So when leadership frames it like that, it tells you they think there's still a massive runway.
Absolutely. They're nowhere near hitting a ceiling. Profitable growth is still the name of the game.
Okay, speaking of profits, let's tackle that surprise financial item, the Brazilian tax thing that hit operating income in Q3. What exactly was that?
Yeah, they spent a good bit of time on it, and they had to. It was a noticeable hit. It's not an income tax, that's key. It's officially the contribution for intervention in economic domain.
Catchy name.
Yeah, right. But basically, it boils down to a 10% gross tax, like a withholding tax, on certain payments from their Brazilian operations to companies outside Brazil.
Okay. But why did it hit so hard just in Q3? It wasn't just for those 3 months, was it?
No, not at all. And that's the crucial part. The expense they book in Q3 covered the period all the way back from 2022 right through Q3 2025.
So like years of payments.
Exactly. It seems a court ruling in Brazil involving someone else entirely made them reassess their own tax position and the likelihood of winning. So, boom, a multi-year retroactive charge.
Ouch. That's the
Yeah.
kind of thing that keeps CFOs up at night.
You bet. International tax is notoriously complex.
So for you listening, the takeaway isn't the crazy tax name. It's more about how these, external legal shifts in one country can suddenly ripple back through years of finances.
That's it. And financially, the point they really hammered home to analyst people like Ben Swinburne and Steve Cahall was that if you stripped out this one-time non-recurring charge.
Their operating income would have actually beaten expectations.
Precisely. The underlying business performance was stronger than that headline number suggested.
Okay. And that seems to connect to their longer-term goals then, because despite this hit, they actually raised their margin targets, right?
They did. They bumped the full-year operating income margin target up to 26%. It was 25% before.
So the message is the core business is getting more efficient even with these bumps in the road.
Yeah, the commitment is still healthy revenue growth, expanding those margins, and growing cash flow. They want to grow margins every year, even if the pace varies.
But growing margins isn't just about cost control. You need revenue growth, too. Which brings us to advertising.
Yeah.
How's that unit actually performing? They mentioned moving into a walking phase.
Yeah, walking, not crawling anymore. Sounds like it's really gaining traction. They said they're on track to more than double ad revenue this year.
Double. Okay.
Yeah.
Even from a small base, that's significant.
It is. And what's interesting is the type of growth. They mentioned programmatic advertising, that's the automated real-time ad buying, is actually growing faster than their sort of traditional upfront deals.
Programmatic, that's where the real skill comes from, isn't it? They mentioned integrating with Amazon DSP and AJA in Japan. Why is linking up with DSPs so important?
Right. So a DSP, a demand-side platform, is basically the software big advertisers use to manage their campaigns across lots of different websites and platforms all at once.
Gotcha.
By plugging into major DSPs like Amazon's, they just make it way, way easier for those large advertisers to buy their ad space automatically, seamlessly. It opens the door wider.
Okay. They also talked about fill rates. How many ad slots actually get filled. They said rates are improving, but their main goal is optimizing total revenue, not just fill rate percentage. That sounds a bit weird.
It does seem counterintuitive at first, yeah. But it's actually pretty smart. See, a low fill rate means you have empty slots. But if they think they can sell a slot for a much higher price later, maybe they'll hold it back for a bit.
Okay, so keep the fill rate lower now to get more money overall later.
Exactly. It's about maximizing the yield, the revenue per viewer, not just stuffing every single slot the second it becomes available.
And on the tech side for ads, they mentioned ad interactivity coming soon, like late Q4. But the big sort of AI-driven stuff is further out.
Yeah, they specifically flagged 2027 for the deeper investments. Things like using machine learning for optimizing ad delivery, better measurement, more advanced targeting. For now, they seem focused on just making it easier to buy.
Makes sense. Get the basics right first. Okay, let's shift gears to engagement. That's the core engine, right? What numbers did they share to show they're still leading?
Well, total viewing hours actually grew faster in Q3 than in the first half of the year, which is pretty strong. And they hit record quarterly view shares, 8.6% in the US, 9.4% in the UK.
Record shares. Wow.
But they also talked about this idea of punctuated value, specific things that deliver outsized impact.
And what were the big examples they gave for that?
Two main ones. That Canelo-Crawford boxing match, apparently the most viewed men's championship fight this century.
Huge.
And then their original film, K-pop Demon Hunters. It became their biggest movie launch ever. These kinds of events, they argue, really move the needle on signups and keeping people subscribed.
Right. And the success of K-pop Demon Hunters actually prompted a question about theatrical releases, didn't it? Like, would this push them to put movies in cinemas first?
Yeah, Robert Fishman asked that, but leadership was really firm. They said, nope, no change in strategy.
Really? It didn't tempt them at all?
Apparently not. They argued the film's success actually reinforced their model because people could watch it instantly, rewatch it easily. That immediate, ubiquitous access is the value proposition. So still exclusive first-run movies on the platform.
Interesting. Sticking to their guns. Okay, so that focus on unique value seems to be driving the push into new areas, too, like live events. That Canelo fight number 41 million viewers. That's massive.
It really is. And they pointed out it was a top 10 event in something like 91 countries. So even though live sports is still a relatively small part of their overall content spend,
The impact is disproportionately large for acquisition and retention.
exactly. And they're leaning into it. They highlighted the upcoming NFL Christmas games, the World Baseball Classic in Japan in 2026. More of that punctuated value.
Okay, and what about gaming? They seem to be framing it more broadly now as interactivity. What does that actually mean?
Yeah, it's less about just hardcore console-style games and more about experiences that kind of complement the viewing. The first specific thing they mentioned is real-time voting. That's coming with a show called Star Search in January.
Real-time voting. Yeah.
And for the more traditional games, it's sort of a less is more approach now, focusing on a few key areas.
Which areas are those?
Four main ones they called out. Immersive narrative games based on their own IP, like Squid Game Unleashed, kids games like Peppa Pig, big mainstream licensed titles. They mentioned Grand Theft Auto.
GTA. Wow, okay.
And then, this seems important, social party games. Things like Boggle Party or Pictionary, designed so you can play them on your TV just using your phone as the controller.
Making it super accessible, no extra hardware needed.
Right. Lowers the barrier to entry massively for their whole subscriber base.
Smart. And before we move off content, there was that interesting Spotify deal. What's that about?
Yeah, it's a video co-exclusive partnership. They're getting a curated selection of top podcasts, video versions across different genres like pop culture, true crime, sports.
So broadening the definition of entertainment on the platform again.
Exactly. Pulling in content from a different sphere, adding variety.
Okay, let's zoom out. M&A, consolidation, always a hot topic in media. They stuck to their builders, not buyers line pretty hard, didn't they? Said they don't want legacy media assets.
They did. Very consistent on that. They argued that past big deals like Disney Fox or Amazon MGM didn't fundamentally change the competitive landscape for them.
Their argument is that the real advantage comes from building the hard stuff internally.
Yeah.
Like the global production, the tech, payments, customer acquisition.
That's their position, that buying another company doesn't replicate those complex integrated capabilities.
Okay, that's the official line. But you have to wonder, with content costs, especially for must-have live events, soaring, does build, don't buy hold forever? I mean, could a truly unique global sports property force their hand?
It's a fair question, definitely. They're betting right now that licensing works, like they do with Suits or Peaky Blinders, and that it's still the best way for IP owners to build value. But their M&A framework, does it strengthen capabilities? Is it a big opportunity? It does leave the door slightly ajar, doesn't it?
It does, for something truly transformative, maybe. Okay, last big topic, AI. Generative AI specifically. They've used machine learning for ages, right? So how does Gen AI fit in?
Internally, it's mostly about productivity. Better tools for content production, for ad optimization, for improving the product experience itself, targeted investments there.
And what about the external threat? Things like Sora 2, these AI tools creating video content. Are they worried about that?
They seemed, well, relatively unconcerned about it replacing their kind of high-end creative work.
Really?
Yeah, their take was interesting. They think the near-term impact of those AI content apps will be mostly on user-generated content viewing.
So competing more with YouTube or TikTok hours than with, say, a major film production.
That seems to be their read on it right now. They see AI as a tool to help their creatives tell stories better, faster, in new ways, as they put it. But it doesn't magically make someone a great storyteller.
So investing in tools to aid creativity, not replace it.
That is the message.
All right, that was a fantastic deep dive just into the Q&A. So for you listening, the key themes really seem to be a disciplined financial path, right? Expanding margins even with that weird Brazil tax hit.
Yep. And the ad business really hitting its stride, moving into that walking phase with programmatic driving growth.
Plus that calculated expansion into interactive live events and gaming, focusing on high-impact, unique experiences.
It really feels like the strategy now is balancing that core, reliable content engine with these punctuation points, these high-value experiences that get people talking and keep them subscribed. That balance seems key.
Absolutely. Which brings us to that final thought. They insisted K-pop Demon Hunters reinforce their distribution model. But the success of Canelo, the big bet on the NFL games, it shows how valuable live is. So here's a question. Is there any live event, any piece of IP out there so unique and globally valuable that acquiring it could actually make them break that decades-long builders, not buyers rule for content rights? Something to ponder as we head toward 2026.